Lewis, thank you so much for joining us today.
Well, thank you very much for having me on again, Elijah.
All right. Now, the first topic I'd like to discuss is the precious metal markets, because we've seen over the last month and a half since we had you on last, gold and silver are down significantly. What is going on with the precious metal markets right now?
Well, my view has been, and most people's view in the precious metals market, is they seem to have a nice control on the price. Turd Ferguson or Craig Hemke has pointed out that whenever the precious metals hit their 200-day moving average, boom, they get knocked back down. That's somewhat clockwork. So I can't say it was unexpected, but then there's also things at play. The Fed and interest rates, the supposed improving economy has taken away some of the investment demand for gold. And we've seen the retail demand at the U.S. Mint and at the Perth Mint. Generally, those numbers are 60 to 80% down from their peaks in 2015. But I'd also mention, Elijah, that 2015 was a unique year in that we saw a wide range in silver prices. I think the peak was like almost $18.50 and the low is in the 13s. And we do see in the retail markets at the U.S. Mint, when you have prices rising rapidly or falling rapidly, that does pick up demand. So when the prices are falling rapidly, Americans like to get that bargain in because they think they're going to get a bargain. And then when prices are rising rapidly, people don't want to miss out, so they buy. What we've seen over the last couple of years, and especially the last 12 months, is silver really staying within a very tight range between 16 and 17. Gold, pretty much the same thing. They haven't really taken off. So I think that's impacted the enthusiasm to buy. No one's thinking they're getting a real bargain right now because the prices aren't dropping rapidly. And no one's worried that they're going to miss out on some type of big run-up.
Now, you've talked about also that a lot of people believe that gold should rise in a crashing economy only, it seems like a lot of people think. But your case is that even in a boosting economy, jewelry demand for gold can boost precious metal prices.
Yeah, let's talk about that, because I think most people who are holding precious metals, at least our listeners, people that are involved in the precious metal space, got involved in gold and silver because they saw Federal Reserve out of control, doing quantitative easing, printing money, lowering interest rates, stimulus, all things that would debase the dollar. And then we saw the other central banks doing the same thing, ECB, QE, Japan, QE, China printing money to boost GDP. So precious metals are viewed, and rightfully so, as a way of protecting yourself against fiat debasement. And that's always been the case. And we've had cases in the past where gold and silver have risen precisely when we've had those inflationary periods, political uncertainty, fiscal uncertainty, monetary uncertainty. We've seen that. There's no doubt that that is a main reason why gold and silver could rise, that pushes gold demand up. And also, as I mentioned, the speculative money comes in when it's rising. The price is going up fast and the price is going down, or the price is going down fast, one or the other. But there's another scenario where gold and silver demand increases and then also could drive the price higher, and that is in an economic boom. Now let's look at China. The reason Chinese gold demand is strong and has been strong the last 10 years, same with India's, is not so much that they're preparing for a collapse, but because they're wealthier. Chinese people today have more money than they had 20 years ago, more disposable income. Same with Indians. And the reason that matters is gold historically had the demand for gold, the number one demand for gold has been jewelry. And jewelry is actually over 50% of overall gold demand. Investor demand is half of that. And then central banks buy about 10%. So central banks are not a major player. People like to focus on what central banks are doing. They don't buy in the aggregate as much gold, nearly as much gold, as is purchased for jewelry. And a lot of that jewelry is purchased in India and in China. Now, moving over to silver, the demand for silver, as everyone knows, is between 60 and 70% industrial. Well, in a good economy, you're going to get more demand for industry and therefore more demand for silver, for electronics, for solar. But on the jewelry side, jewelry and silverware, according to the Silver Institute in 2017, that demand was twice the amount of the demand for silver investment coin, bars, and rounds. I think it was 260 million ounces to 130 million ounces. So in a good economy, you can have a rising gold and silver demand because of the wealth effect, so to speak, rather than the fear of a collapse. And what I did was I went back and I looked at the prices of gold, some very good periods of gold price rising. Gold rose, as everyone knows, in the late 70s up till the peak period of gold in 1980, when silver peaked at $50 and gold peaked at $800. That was due to a bad economy. That was due to political uncertainty. That was due to inflation, oil shocks, all the nasty things that happened from Nixon through Carter. But gold rose from $300 an ounce to $500 an ounce from 1985 to 1988. And those were during the Reagan boom years. You know, the excess, the yuppies, 7.3% GDP growth in 1984, 4.2% in 85, and so on. So you had a decent growth in the wealth of the United States. And then in the Bush years, gold rose from $340 an ounce to $830 an ounce between 2003 to 2007. And you had decent growth during those periods. 2004, you had a 3.8 GDP for the year. 2005, 3.3. Now, some of that rising occurred because people were concerned about what was happening with the U.S. deficit and so on. But for the most part, I do believe that Indians and Chinese right now are buying gold and silver because they can. And I also think that if we lose investment demand because somehow people stop worrying about the deficit and stop worrying about the unfunded liabilities, which they shouldn't stop worrying about, but people do, and we could possibly see a period of time where we continue to have perhaps improved U.S. economic growth, debt-fueled as it may be, as unsustainable as it may be. But if you look at what's happening in China, their boom is also unsustainable. It's the result of producing GDP through the creation of credit. And it does end up getting money into the people's hands in China so that they can buy gold. So it's possible that we could see an increase in gold demand even if there's a decrease in investment gold demand. And if you think about who buys gold, there's people that buy gold and silver to stack, and we see those bullion numbers at the U.S. Mint are low, but far more people buy gold jewelry and silver jewelry. So that demand could come in there. And a lot of the bullion dealers also do sell those wealth-wearing necklaces, bracelets, investment-grade type jewelry. And that's basically what they buy in Asia. They don't buy the trinket 9-carat, 10-carat gold. They buy the 22-carat gold. And mostly around the world, they buy the 91.5 or 92.5% sterling silver. So I think that is a possibility that people in the United States, if they lose their fear of collapse, will buy jewelry. And the advantage there also is knowing that the problems haven't gone away. So there may be a temporary wealth effect, but you're still piling on the debt. You're still running reckless policies, but at least they can extend the good times or create some good times before it comes crumbling down.
Now, what is your perspective? You're saying that even if the economy doesn't collapse and there's an economic boom, we should still possibly be bullish for precious metals. But what is your perspective on what will actually happen in the economy? Do you see a boost coming or do you see a collapse coming?
I see a boost coming because we've moved off of monetary policy stimulus. Monetary policy stimulus means what the Federal Reserve does in terms of interest rate manipulation and the money supply. Generally, monetary policy only can impact asset prices. It doesn't put money in the average person's hands. It boosts the price of assets. It boosts people who already have money. They can borrow money. They can buy more assets. They can buy the stock market. It's an incentive to invest in the stock market because bond prices are low. And that's exactly what Bernanke and then Yellen both said the purpose of their quantitative easing program was to create a stimulus. And even though savers would be hurt, they were trying to argue that a lot of people have houses, so we're boosting their housing prices, we're boosting the stock prices. But again, that doesn't create economic activity. It doesn't put money in people's hands. That's what Europe is doing now. The Fed has stopped doing QE, has come off the bottom of 0% interest rates and moved up to 7 interest rate hikes. So they're almost at 2% now. And the rest of the world, the European Central Bank, the Bank of Japan, all have 0 negative interest rates, the Bank of England, and they're doing QE, meaning they're buying bonds, they're buying whatever they get their hands on. And then the Swiss National Bank is actually buying equities. But what the United States is doing, which may cause a mini boomlet, is fiscal policy stimulus, which means the tax policy. Now, tax policy and fiscal stimulus actually puts money into people's hands and allows them to spend it. So if you have a tax cut and you have more money to spend, you are wealthier. And as that money flows in the economy, it could potentially create more jobs. It may indeed increase the deficit if the tax revenues don't increase as a result of the tax cuts, but sometimes they do because more economic activity is created, and therefore you get this effect where, like according to the Laffer curve, you end up having more tax revenues as a result of a tax cut. But whether that happens or not, it's possible that the tax cuts could have a salubrious effect on the economy, and Trump is talking about doing an additional tax cut sometime in October. Now, if that happens, you would still have I would think, the worry that you might have an economic collapse and you'd want to protect yourself, because if indeed the deficit is still rising and they're still borrowing from the future to fuel this consumptive boom, you still want to be concerned about that. But at the same time, you also want to think, well, are the good times rolling now? What do people do when they have disposable income? They like to buy things that show off their wealth, and gold and silver are one of the things that people buy, as you just point to India and China, when they have additional money. Silver especially in India, because you now have a middle class that has grown to about 300 million people, about the size of the entire United States, and they can now buy a $18, $22 sterling silver bracelet or necklace, and they do. Because they can, not because the average person in India is concerned that the whole world is going to come crumbling down. I did an interview with a guy who spent 15 years in China, and he says what the Chinese buy in gold, they're not buying investment-grade gold. They're buying a lot of commemorative-style gold, things with Chinese historical significance carved on them, and they pay a premium for that gold, but yet they're buying it because they want it. They're buying the jewelry for adornment. They're buying it because they're wealthier. They're not buying it because they think the whole world is going to come crumbling down. So that's why I think, if you think of all of the rich societies we've had in the past, the golden eras, they weren't buying. See, gold works in both ways. It works to show off wealth, but it also works to protect wealth.
Definitely. And before we let you go, I wanted to just touch on one last topic. On your website, you were talking about a lot of things coming up this summer that could cause political turmoil. Can you expand on some of these? One of them you mentioned was, how U.S. Supreme Court Judge Anthony Kennedy is resigning. How do you think these events will impact things politically?
Well, we are seeing a desperation on the part of the traditional left wing and the far left wing, in that they had in Justice Kennedy someone who was a conservative, but at times would vote with the liberal wing of the judge, especially on social issues like gay marriage. They know that Donald Trump is going to replace him. They also know that he has a list of 25 justices that he pre-selected, I think with the help of the Federalist Society, and they all hold views that appear, and maybe we don't know because not all of them have a judicial trail of precedents that they've written, but it seems they were all selected on the basis that they are constitutional originalists, meaning that they're not going to bring in external considerations when examining the law. And the problem with that point of view, especially for the Roe versus Wade decision, is many believe that the Roe versus Wade decision, apart from whether you have a belief whether abortion is right or wrong, is that the right that was created to the abortion was created on faulty legal grounds. They came up with this idea that the woman has a right to choose based on a penumbra of rights coming out of the Bill of Rights. It's not really a solid decision. So they're concerned that a judge who has this strict reading of the Constitution could find a way to overrule it. Not that they would be looking to overrule it, but if a test case came, because precedents under stare decisis are generally left in place, but as we've seen, they can be overruled. And most recently, the union ruling that went in the favor went against the unions was a decision that overturned a prior decision that said that the unions could collect union dues from people that were in the union. So there is a history of courts overturning what they call established precedent. So the left is very concerned that that would happen if a new judge would come into place. Now, we've seen what they think about it. They don't want to take it lying down. We saw Michael Moore on TV with Bill Maher saying he'll lead 1 million people to surround the Capitol to prevent a vote on such a justice from taking place. We're seeing, these type of viral videos where someone wearing a MAGA hat gets beat up, or they take his hat. So and the people getting chased out of the restaurants. This type of thing some of it is mostly just the media making it into a big deal, but that becomes the reality if people become on edge. They believe that their rights are about to be taken away on one side. On the other side, they believe they're being under constant persecution, harassment. That's where you get the tinderbox impact, where you could have, and it's hot, that's when you have riots. And that's the type of thing that it's an uncertainty, because you don't know how it's going to play out. And we also don't know how the election is going to turn out in the midterms in November. So up until then, we're probably going to see a very aggressive Donald Trump in trying to get his appointee through, trying to pass more tax cuts, whatever he can do. And that's going to infuriate the left, and their response will probably reflect that infuriation. And that could create a lot of turmoil.
And do you think this could impact the stock market at all?
I thought that the stock market would have had a hard time with Trump, not because of his policies, because I always thought, well, if he wants to do infrastructure spending and tax cuts, that would probably be good for the stock market. I thought that the Trump turmoil, not just the turmoil around his personality, but remember there's this whole Russia investigation. I thought that a lot of that would create a wild card that would make investors nervous. But either investors don't seem to be nervous, or they're managing to prop up the stock market to allay the fears of people who might otherwise be nervous. Because we haven't seen in years, when there is an issue of political uncertainty, those are the times when you should see gold rocket up $50. It doesn't happen anymore. Those are the times you would expect to see the stock market take a big dive. We don't see that very often. We see this general grinding higher of stock prices and this general capping of gold and silver prices, and then the occasional smash down, but you don't see these big spikes. People don't seem to be nervous when Kim Jong-un fired off a missile, a rocket. Those types of things in the past were triggers for gold and silver to move higher, and they were triggers to bring the stock market down. But we haven't seen any event, even the potential bringing of impeachment or the reverse, the flipping around of firing Rosenstein, things like that don't seem to jar the markets as they once did.
All right. Well, Louis Cammarosano, thank you so much for joining us today.